and hate to keep all the audience waiting. Valentine, can I go?
Yes.
Okay. I'm going to start in Mandarin. 大家早。我是马泽联合会计师事务所 Forvis Mazars 台湾的所长，我是张峰干会计师。今天首先欢迎大家参加今天本次的 Doing Business in the US 的 Webinar。那么现在我先用中文开一个场。那么希望今天有来参加的观众呢，也许以往在别的地方现场，例如会计研究发展基金会或者是其他的 seminar，我们曾经见过面。那么如果我们曾经见过面的话呢，那么也欢迎您再度来我们这里来吸收一些投资美国相关的事情。那么但是一会儿的内容呢，就多数要用英语来进行了。那么我来介绍一下今天的两位讲者，一位是办公室在美国加州洛杉矶的Evonne Chen，另外一位是办公室在St. Louis Missouri 密苏里州的 Joshua Zellerman。现在请他们也简短的自我介绍一下。Now I'm going to ask Evonne and Josh to introduce themselves. Lady first. Evonne.
Okay. Thank you, Al. And thank you everyone for joining this webinar. My name is Evonne Chen. I'm a tax partner with Forvis Mazars US, based in Los Angeles office. I am a tax by background, so I work, mostly on the tax side with a lot of business. I especially work a lot with cross-border clients, like either inbound clients from Asia into the US or outbound clients from US to Asia or other countries as well. I was originally born in Shanghai, so I am actually fluent in Mandarin. During our presentation today, I would try to, translate or convey some of the terminology in Mandarin to hopefully make the context a little bit easier for everyone to understand. Josh, I will turn it to you.
Yeah, thank you, Evonne, and good morning, everybody. Really appreciate the opportunity here to present doing business in the U.S. And discussing some of the core and common items. My name is Joshua Zellerman. I'm an international tax partner. I believe, as Al mentioned, I'm out of St. Louis, Missouri. Been in public accounting for over 16 years, primarily dealing with international tax issues. One of the big things we do as part of that is helping inbound foreign companies, especially with sort of the current state of our taxation and tax rate. Really help, from beginning to end as clients come in, into the United States and deal with a multitude of hurdles, understanding both just the business sort of market, but also some of the legal, aspects of creating a business presence in the U.S. and especially the taxation issues. So glad to be here, and thank you. For this opportunity to present some of this information to you.
Thank you, Josh. 今天的讲题呢，我们大概会说明投资美国在设立的公司有哪些形态，有哪一些注意的事项，那么以及常常会碰到的问题或者是挑战。然后接着我们会介绍美国的直接税 ，namely 所得税，那还有一些间接税，那么相关的事情。那么更重要的一点是，下个月的18号呢，我们还有一场接续的其他的内容，包括目前比较夯的议题tariff，以及美国一个新的法案。台湾我们叫做大而美丽法案，那么美国我前几天听他们讲，他们叫做 OB3 的法案。那么也欢迎大家下个月继续来参加我们的 webinar。那么without further ado， Now I turn over. I believe the first presentation will start from Josh. Go ahead, Josh.
Yeah. If we want to go, did we go through the agenda, Al? My apologies.
I did.
Okay, perfect. So current taxation status, Valentine, if you can move the slide. All right. So before we dive into really doing business in the U.S., we wanted to go through the current taxation status between Taiwan and the U.S. And as it stands, the U.S. really has not entered into a standard tax treaty with Taiwan because of, as it says, lack of really diplomatic recognition. As a result, there is really no agreement in place to address areas such as double taxation, reduce withholding rates. Probably in my mind, one of the biggest ones is really defining what permanent establishment is in the U.S. And then another big issue is, procedures for tax disputes. Really, we see that in transfer pricing arena. In the absence of this, really, the U.S., really the tax law, the tax status is really governed by the local domestic tax laws of each jurisdiction, meaning this means that a U.S. person, for example, with income from Taiwan and Taiwanese persons with income from U.S. may be subject to full domestic rates really in both countries. And this results, as we know, in double taxation. So, because of these no treaty benefits, for example, if we have a Taiwanese or a U.S. subsidiary of a Taiwanese foreign company, and that foreign subsidiary, for example, pays maybe interest on some debt or pays a dividend, it's really going to be under the full, general rate, which is currently 30% imposed at the statutory rates on the Internal Revenue Code, and really vice versa, at least from our perspective, a U.S. person earning income in Taiwan. Now, I believe not too long ago, there was the tax treaty passed through, I believe it went through the House of Representatives here in the U.S., but did not pass Senate. I believe there are still ongoing talks. We'll discuss this, a little bit more in detail later. But I know there is definitely a viewpoint that as we do have several treaties with Asia Pacific countries, Taiwan is on that list, and I think there is a general, my understanding from Capitol Hill here in the United States, there is motivation and a push to get that done. If and when is always the question, but as it stands today, there is not a treaty in force. Go to the next slide. Want to click? Yep, thank you. So, as I mentioned, there is active legislation in the U.S. Congress to address this issue. Lawmakers have proposed bills, such as the U.S. Taiwan Expedited Double Tax Relief Act, which would provide treaty-like benefits to Taiwan residents, contingent on the reciprocal treatment for the U.S. citizens in Taiwan. This approach is designed to sort of circumvent the diplomatic barrier by authorizing a tax agreement between the AIT and the Taipei Economic and Cultural Representative Office in the U.S. My sort of how I view this is, if there is a treaty and we do get it sort of across the, into the arena of it's a treaty in force, so across the finish line from a legislative perspective, I would envision it to be very competitive or similar to a lot of Asia Pacific treaties. We see this sort of approach in, for example, North America with Canada and Mexico, and also in the European Union. A lot of the treaties look and feel the same, with very, very similar rates in that sort of geographical area. So I would expect it, if not to be even more favorable if and when this is passed. And again, the proposed legislation would allow for treaty-like benefits such as, and the key one here to me, the big three are reduced withholding rates, relief from double taxation, but also competent authority as it relates to transfer pricing, And the other one is really just defining what a permanent establishment is. So as of early 2024, the relevant bill has passed, again, the U.S. House of Representatives, but it's not yet been enacted into law, not being able to pass the vote in the Senate. These are ongoing negotiations, with bipartisan support, which is has been rare these days in the United States. So the fact that that is something that has bipartisan support gives us a little bit of hope that this will hopefully be a treaty we can see being enforced, hopefully soon. All right, worldwide versus territorial tax regime. So I'm going to go back in time to 2017. We had tax law put into effect by the Trump administration, and this tax reform that came out of it really became effective in 2018. Okay, we're going through that again, and Evonne and I will talk through that towards the end as it relates to we call it OB3, One Big Beautiful Bill Act here in the U.S. So it's sort of the Trump administration tax reform round 2, although it is not, in my opinion, as significant as round 1. But really what round 1 was really advertises is we're going to a worldwide taxation, which the U.S. had historically been on, I believe, since 1962, made further by 1984 tax reform, but had been sort of in a worldwide taxation arena. And really what this is the U.S. Taxes citizens, residents, domestic entities, business entities on their worldwide income, regardless of where it's earned. And so that is, the system is unique in that it imposes this taxation on, for example, business entities when they are tax residents, even if they're tax residents of other countries, which is not an international norm, as we know. And so this, out of this first round of tax reform, this territorial taxation was really sort of boasted even by this administration that we're going to this territorial system. We have this one-time toll charge, and the Tax Cuts and Jobs Act of that 2017 tax law that was administered really was more of a participation exemption for certain foreign earnings of U.S. companies. And what that really meant is the best way to describe it is it's really a worldwide anti-abuse system, not a territorial one. In fact, I've heard it say it's more of a hybrid territorial or a hybrid worldwide, because foreign source income, if not more than the other, is subject to U.S. tax under various regimes. So in reality, we call it, many of us will say we're in a worldwide taxation regime, and if not, in reality, as long as you pass those hurdles, you're even in more of a worldwide taxation regime. But there are many benefits that also came out of that, which we'll lightly address, including foreign inclusion deductions, domestic export deductions, and probably our most popular one that helps us out a lot now is foreign tax credit. Those both apply to individuals and corporations as well. Foreign tax credits. So entity overview and implications here. So
Josh, you wanted me to take over this part?
Yeah, I'm sorry.
You can
I
keep
jumped
going.
in.
I don't mind.
No, go ahead, Evonne. My apologies.
No worries. So I think Josh covered a lot of the high level, overview of the U.S. tax system, and I want to really kind of start to talk about some of the basics. So let's talk about something that keeps a lot of CFOs up at night. Entity structure， 那在我的了解里面，在台湾呢，大家可能比较熟悉的可能是股份有限公司。那在美国呢，我们会有一些不同的公司架构。So let's let's start with the C Corp, C corporations, or we call it C Corp. Think of this as big company structure. And here's something important. So when Taiwanese parent companies want to establish a U.S. subsidiary, the C Corp structure a lot of times is like the go-to choice. It's by far, the most common structure that we have seen with a lot of our Taiwanese clients, and for some good reasons. The good news is the C Corp structure in the U.S. is taxed at a flat 21% federal income tax rate, compared to I think Taiwan, it's about 20% corporate tax rate. So it's quite similar. But more importantly, in the US, a C Corp structure gives you a few advantages. Number one is it's limited liability, so strong legal protection. Second, I would say it's reinvestment flexibility. You can keep the profit in the US to grow the business without the triggering immediate repatriation taxes. Third, it is a preferred professional structure. So, all the banks, vendors, customers, they're all familiar with it. It is like a signal that, telling everybody that you're serious about the US market. Last but not least, there is also this future flexibility about a C Corp structure. It is easier to bring in investors. You can issue stock options to employees, or even go public later in the US. Now, you've probably heard about this double taxation term with the C Corp structure in the US. 在中文里面呢，这个叫双重课税。It means that the corporation pays 21% on its profit. Then, if and when you distribute dividends back to Taiwan, those dividends get taxed again, both by the U.S. Through withholding tax and by Taiwan tax authorities. But here is the key: this is only an issue when you are immediately repatriating profits. So many of my Taiwanese clients that, they operate their US C Corp for many, many years. And for all of these years, they have been reinvesting the profits to, continue to grow the US business, continue to expand the market without paying any dividend at all to the Taiwan parent, which means no dividend, no double taxation problem yet. So you can think of it this way. If you're building a long-term operations in the US, which most of you are, the C Corp structure lets you to grow that business efficiently. You only face double taxation when you decided to put money back to Taiwan. I think there are obviously certain exemptions or other planning opportunities that we usually help our client to claim or plan ahead, trying to mitigate a partial of the double taxation problem. And I will also mention some acronyms which are very important for U.S. operations. And then Josh already mentioned, most of them in the opening overview. The first one is GILTI. It's the Global Intangible Low Taxed Income. 在中文里面，它是全球无形资产低税所得。The second terminology is called BEAT. It's Base Erosion and Anti-Abuse Tax. 中文里面应该是说它是一个税基侵蚀反滥用税。Third but not least is Subpart F. This is also an anti-deferral regime. What all these acronyms mean to you? These are the U.S. anti-abuse rules that can trigger current U.S. taxations on certain type of foreign income, even if you haven't brought the money back to the U.S. yet. So I think obviously we're doing just an overview here. I'm not gonna go dive deeper into these because I believe Josh might gonna cover some of them in the later slides as well. So the bottom line is that for Taiwanese parent companies establishing a serious long-term presence in the US, the C Corp is usually the right choice. yes, it's a more complex structure than a lot of other structures, but it obviously provides a lot of business benefits like professional credibility. There is strong legal protection, flexibility to reinvest and grow. And especially it's very beneficial for a lot of multinational operations. On the slide, the bottom half of it, as you can see, there are obviously other entity structures available in the US. For example, limited liability companies or limited partnership. I think the audience might want to ask me, if C Corps are so popular, why am I even talking about LLC and LP? So think of an LLC, which we call it limited liability company, as a more flexible alternative. It is particularly used for smaller operations or joint ventures. It is very popular in real estate investments. And LLC structure or partnership can also serve as holding companies in a global multinational company structure. There are some key advantages to LLCs and partnerships, like obviously like liability protections. 就好比就是台湾的有限公司 your personal assets are protected. The most important advantage is that it also has tax flexibility in the US as well. So that is the magic part. Basically, you can choose how to be taxed when you are LLC or partnership. For example, if an entity is a single member LLC, which is owned by, 100% owned by one member, by default, it is actually a disregarded entity for tax purpose, meaning the US government, IRS, basically ignores it, exists for tax purpose, and everything that gets flowed to its owner. If the entity is a multi-member LLC, by default, it is taxed as a partnership. 那也就是中文里面我们常说的一个合伙企业。But in the US, you have the flexibility to elect. You can be either taxed as a partnership or you can elect to be taxed as a C Corp if you want. So the partnership tax advantage is called pass-through taxation， 也就是我们常说的一个穿透课税。With 穿透课税 pass-through taxation, the LLC itself does not pay any federal income tax. The income flows through directly to the owner, as I mentioned earlier. So for a lot of Taiwanese parent companies, if a Taiwanese corporation owns a US LLC, which is taxed as a partnership, I'm just making an example, the income will actually flow all the way up to the Taiwan parent. But you will still obviously need to file a US tax return to report the income, and US withholding tax might apply, when profits go to Taiwan. You can claim what Josh mentioned earlier, foreign tax credit, 外国税额抵扣 in Taiwan for US tax paid, subject to some limitations. Then you might ask the question, I think the audience might ask the question is like, then in what scenario do we see Taiwanese clients would choose LLC structure? I can tell you from my experience is I see many clients with real estate holdings. In the US, it's almost always, they would preferable to set it up as an LLC. I also see a lot of joint ventures with US partners. That happens a lot is when there's a big company, Taiwanese company, they want to set up something in the US, but they also brought in a domestic, like a US partner. And with this two partner structure, a lot of times it is more, advantage or beneficial to set it up as a joint venture. So that we see a lot with our clients. What else? And then a lot of times also, I think liability protection, I already covered. And also I would say companies that wanted to use some small initial investment to kind of test the market with minimal commitment, but then, then they can decide to convert later or elect to a C Corp taxation later, or even convert to a C Corp as they grow. So there is a lot of flexibility in terms of this LLC structure. But for most our Taiwanese clients or companies that they are establishing a manufacturing, distribution, or significant service operations in the U.S., a lot of times C Corp is the more standard or preferred choice, for many good reasons that I mentioned earlier. Would you please advance to the next slide? Okay, the third option I think we want to talk a little bit about is there's another option called direct branch. 在中文里面呢，这个就是可能是我们常会提到的一个分公司的架构。分公司的架构，那a direct branch is actually not a separate legal entity. It is literally just your Taiwanese company extending an arm into the US. Think of it like opening a branch office in another city. It's the same company, just different location. The good side of it is it's obviously a simple structure. All the profits and losses go straight onto a Taiwanese company's book. There is no separate, corporate legal entity to maintain. But the bad news is that the entity might face branch profit tax. 在中文里面呢，就是这个税种叫分支机构利润税。分支机构利润税。So this is where I think the U.S. government is very creative. They imposed something called branch profit tax, which is up to 30%. It's on top of the regular corporate income tax. Basically, the U.S. government is saying, since you are not a U.S. corporation, we are going to treat money going back to dividend as if it's a dividend. So we are going to tax it. So you get hit regular corporate income tax. It's like 21%, obviously, plus some state tax, which we will touch a little bit later. And then you have this branch profit tax up to 30%. That is a lot of tax. So Josh mentioned about the tax treaty earlier. If the U.S. had a tax treaty with Taiwan, this 30% rate could be reduced significantly. Maybe to 5% or even 0. But as we discussed earlier, right now we don't have that treaty yet. So we're kind of stuck with the full 30% rate at this moment. So, yes.
One quick point on that too. Really the compliance too, Evonne, associated with that branch, and really even single member LLC is a tax filing here. We refer to as a foreign corporate income tax return, or a form, to be specific, 1120F. It tends to be a lot more technical and complex than just a regular corporate form 1120. And the real difference is, as Evonne mentioned, is that branch profit tax is a year-to-year determination. You don't have the ability to determine when you want to pay a dividend. So you can defer repatriating tax. So if you're getting caught in that, you're growing in the U.S., there's a good chance you're going to get caught on that additional tax every year without your ability to turn it on or off. Plus the more difficult compliance.
Yeah. Exactly. And just like Josh mentioned, sometimes when you think about, this is just a branch, we don't have any additional, I might not have any additional U.S. compliance burden, but that is not correct. But because you still have all the U.S. compliance requirements, you still need to, register with state tax authorities, get tax IDs, file tax return, maintain separate books. It's everything is as if it's a separate entity. Okay, next slide, please. Thank you. Okay, now that we've picked your entity structure, hopefully it's a C Corp or maybe other choices depending on the business needs, or at least I already scared you with all the options that we have. Let's talk about some of the more practical stuff, is getting your business up and running in the US. 那我们手上每一个的台湾的客户其实都会经历这些，我常常开玩笑会说，我称这个叫开门7件事，就是这个接下来我们会讲的这个7点呢，是我觉得每一个你要在美国设立一个 US entity 你都会要经历的这样一个过程。Obviously, I think when I go into the details, you will see there are probably more than 7 necessities that we need to cover. The first one is business registration. 公司登记. In Taiwan, I think you register with 经济部。如果我没有记错的话，在台湾你是在跟经济部 register. In the U.S., it's slightly different. You register with the Secretary of State in whichever state you choose. So this is important, which state you choose in the U.S. because each state technically is a little bit different. They have different tax rates, they have different regulatory requirements, they might have different legal protections, or there's also different costs associated with it. Some popular choices that we have seen with a lot of Taiwanese companies, number one choice is Delaware, 德拉瓦州. It is very famous for its corporate law, very business friendly, many large companies incorporate here. Second, I would say California. It's a popular state. If you're doing tax or want to be near the market, California is a great choice. Texas is another one that it's popular because there's no state income tax. Nevada is also popular and it's no corporate income tax and is a very popular state with a lot of Asian companies as well. But here is the catch. Even if you incorporate in Delaware, if you are doing business in California, you still need to register in California as a foreign corporation doing business here. So you might end up registering in multiple states depending on the business operation status. From a timeline perspective, this usually takes about 2 to 4 weeks for basic registration. And step 2 is the U.S. bank account, opening a U.S. bank account. This is sometimes the real challenge here. And some of my Taiwanese clients have joked about this. They say, opening a U.S. bank account as a foreign company is so challenging. And sometimes this is harder than getting their kids to clean their rooms. So that's how difficult it is. And why is this so hard? It's due to the AML and the Patriot Act. AML is the Anti-Money Laundry, 反洗钱法规, 以及 U.S. Patriot Act. Basically, U.S. banks are very terrified of foreign entities. After 9/11, the U.S. got very, very strict about who can open bank account in the U.S. So most of the bank, or if not all of the bank, need to verify who owns the company, what is your source of funds, purpose of the account, expected transaction volumes, and also basically the entire story. Like it feels like, they want to, I'm not exaggerating, it feels like they want to know everything. Yeah. What you will need at least to about, I think, 5-6 items in order to even, start to talk to any bank. One is the EIN number, which is the employer identification number. This is like 在台湾肯定是应该是叫统一编号，每个公司都会有一个统一编号。那在美国呢，它就叫做是雇主识别号码。Second is articles of incorporation, 公司章程。Third, operating agreement or bylaws, 运营协议。Number 4, proof of address, 地址证明。Number 5, passport copies of like all owners or directors. And 6 is many banks actually require physical presence. So they require somebody to show up in the branch in person to open a bank account. So some of the tips, from us, based on our experience dealing with our Taiwanese client is definitely trying to use a major bank that has Asian operations, like banks like HSBC or Citi banks that are probably easier to open because they're more familiar with Asian companies. Also consider maybe a business account opening services. There are third-party vendors out there that can help you to open a U.S. bank account with a fee. This process usually takes minimum 4 weeks, sometimes can take all the way up to 8 weeks to get a bank account open. So you want to keep this timeline in mind and definitely start the process as early as you can. And like I mentioned earlier, have a U.S. presence is extremely helpful. So if you have a U.S. person or citizen or green card holders that can serve as a manager or officer of the company. That's going to help you tremendously. I can give you an example. I actually have a client that came from Taipei this summer. They set up a new entity in the US and they're trying to open a bank account. We spent 3 months back and forth with multiple banks, no success. Finally, we got someone from the company fly from Taipei to US and open the account in person. And it was done, less than an hour. Once he showed up in the branch, submitted everything, printed out in paper, and everything got, done within an hour. Sometimes, it's just the old-fashioned way is the best way to do it. And without a US bank account, so why it's important? Because without a US bank account, you cannot pay your employees a lot of times. You cannot pay your vendors. Some vendors don't accept foreign banks. You might not be able to receive your customer payments efficiently. More importantly, some of the tax payment in the US required to be made using US bank accounts. Next slide, please.
And one big thing to mention with all of this, and we can stay on the slide, is we generally recommend, it helped a couple inbound companies recently, have in the US as a public accounting firm, we can only do accounting and all related functions under that umbrella. We cannot also do legal services. So a lot of times we work closely with international law firms or law firms that have that network in foreign countries, as you will need both for articles of incorporation. Also, they can help provide a lot of the documents you'll need for opening a bank account. We both of us, law firm and us as a public accounting firm, can help obtain EIN, so that's usually not a problem. But just something to note, you'll need both legal and accounting support in the U.S.
Yes, that's correct. And step 3 here up on the slides is what I mentioned earlier already, is the employer identification number，也就是雇主识别号码，这就是类似于台湾的统一编号这样子，每一个公司会有一个它特别的雇主识别号码。So you will need this EIN number in the US for essentially everything, like opening bank accounts, filing tax returns, hiring employees, or applying any license that you think of. So the good news is this process is pretty straightforward. You can do it online via the US government if you have a US person listed as an officer. If not, there is a phone number you can call and an application form that you can mail in, to the government to obtain this ID. Timeline wise, this is another 4 to 6 weeks for EIN number if you cannot do it online. The fourth one up on the screen is, state and local tax IDs and permits. There are different IDs you will need to consider. First would be like state tax ID, for income tax and franchise tax. Some states use your EIN number for federal, but most states will require a separate ID. Another thing I will mention is sales tax permit, 营业税许可证. If you're selling goods, most likely it's required to collect the sales tax, and you must register in every state that where you have nexus, which I will talk a little bit, in the indirect tax section, but there are, different rule in each states. 在台湾就像台湾的营业税一样，但是在美国的话，因为有50个州，所以每个州又有不同的就是营业税的这个法案，所以其实sales tax can get very complicated. And obviously payroll tax ID, if you need to hire employees in the US, you need to get the payroll tax ID and other business license depending on the industry that you are in. Next slide, please. Okay, so now let's talk about something that sounds boring, but can save you from some serious headaches if you understand the importance of it, and then you know outsource to the right personnel to do it. It's the record keeping and payroll compliance，账簿记录的一些要求以及薪资的合规。I'll try my best try to make this painless as possible. So why this is so important? Because because it's required, you know, it's required by the U.S. government that you have to keep first, I would say financial statement, 财务报表 that includes income statement, balance sheet, cash flow statement. Second, transaction records, 交易记录, basically all the receipts and invoices, you know, bank statements, credit card statements, all of that, you have to keep it. Third, payroll records, 薪资记录, and it's bare minimum, it's required you keep it at least for 4 years, that employee time records, time cards, like proofs of wage payments, tax withholdings, and even benefits records that's required to keep at least 4 years of records. Last but not least is also, you know, tax returns and any supporting documents. Keep for at least 7 years. We typically recommend our clients to keep everything, you know, all the records that I just mentioned for 7 years, even though some, you know, records, you know, the US government say 3 years, some say 4 years, some say 7. So for safety, we usually say 7 is the magic year that you will need to bare minimum keep all your records, either on paper or electronically. And payroll compliance, this is a very complicated part, and I'll try my best not to dive into like, you know, all the details, but just want to give everybody like a high level understanding of like payroll tax. Because if you are hiring employees in the US, buckle up, because US payroll is a very complex system. In Taiwan, you have labor insurance, 劳保, and health insurance, 健保. In the US, we have a lot more than, you know, these two categories. For federal requirements, we have income tax withholding, 所得税预扣. So companies must withhold, you know, federal income tax from every paycheck for employees. And second category is FICA taxes, 也就是跟台湾的劳保跟健保有点相似，它其实就是一个联邦保险捐助法案税。那它里面呢主要分2个比较细的税，一个是社会安全税 ，so 6.2%， 6.2% 是雇主要付的，6.2% 是员工付的，一共是12.4%。Second 呢 is Medicare， 是医疗保险税，是1.45% 是雇主付的，1.45% 是员工付的，那加起来就是2.9%。The next category is federal unemployment tax. That's, you know, about 6%-ish on first $7,000 of wages, but there are some state credits can reduce it to 0.6%. So companies also need to pay this, not the employee. There are additional, you know, state requirements. I'm not gonna, you know, very similar, but I'm not gonna go into like super details. So on the reporting side, here's the fun part. There's a lot to file. You will have to file a quarterly payroll tax return called Form 941. You also need to file your annual, we call it payroll summary, called Form W2, that to the government, as well as a copy need to send to the employees so that they can report it on their tax return. There are state level quarterly reporting requirements as well, very similar to federal, but, you know, just additional reporting. So our recommendation in terms of payroll compliance is, unless you have a dedicated HR or payroll person in the US, please consider using a payroll service provider. It could be large companies like ADPs, or it could be us. Like we, Forvis Mazars in the US, you know, provide payroll services to a lot of our inbound clients in the US. On the bookkeeping or record keeping side, we strongly recommend to use proper accounting software. So don't DIY this, don't do it in Excel. QuickBooks, I would say, is the most popular for a lot of inbound clients first set up in the US. And, you know, we also provide bookkeeping services as well in the US.
Yeah. And it's actually the same group that does our bookkeeping service, our outsource accounting service also can help, also, I believe helps in it's under the payroll reporting is under
Yeah.
that same service line. That's strategic for a reason.
Yeah, so that all the, like record keeping and payroll compliance are consolidated all together.
Yep.
Next slide, please. Okay, now we are getting into the meat of the tax discussion, direct taxation，也就是L 在开场的时候提到的直接税。This is where the rubber meets the road, as we say in America. So federal tax return first. So let's talk about high level, what you need to file on the federal level. There is always an annual return that you need to file depending on the type of entity. It could be 1120 for C Corp, 1065 for partnerships with LLCs. It could be 1040 Schedule C when it's a single member owned LLC. So there are different, obviously, like forms to file, annual forms, and the due date are slightly different. Some are March 15 of the following year, some are April 15 the following year, and very similar to other tax system. There are extensions generally available for most of the taxpayers, 6 months extension. The difference in the U.S. is you will have to pay all the estimated tax by the original tax due date. So the tax payment cannot be extended. There's also estimated tax payment requirement when you meet certain threshold. So the complex part to this is there are a lot of different deadline on a quarterly basis. And some is if you miss the sum of the deadline, there are underpayment penalties and interest that potentially can get accumulated. And the second big category is the state and local tax, where things get really, really interesting. And I'll try my best not to dive too deep into it, because as you can imagine, U.S. tax system has the federal level, and also there is the state level. And remember, the U.S. has 50 states. So every individual states, it's like its own country for tax purpose. I can just give you some high level examples for like state corporate income tax rate. The rate varies widely among a lot of states. Like Texas, Nevada, there's no corporate income tax, 0. California is 8.84%. New Jersey can go all the way up to 11.5%. Some lower tax rates state, for example, North Carolina, 2.5, very low. So there's a wide range of the rates, but here's the catch. There's a magic term in the US called nexus, 关联性. So which means you don't just pay tax in the state where you incorporate, you can pay tax in any states that you have sufficient connection, which we call a nexus. It could be, you create a nexus by having an office, having a warehouse, having employees, having significant sales, having property. Sometimes, even just making significant sales to customer in that states, because, a lot of your sales is being shipped to that states. So a lot of times you'll see a Taiwanese company might incorporate in Delaware, but its main office is in California, and it also has an, warehouse in Nevada or Texas. So all of a sudden you need to file tax returns in 3-4 states just because all of these presence. So there's a lot of things to kind of think about before you kind of create a footprint in the US from a state tax compliance perspective. Next slide, please. Oh, okay. I'll turn it to Josh. There's some international disclosure.
Evonne, you need a break anyway. So thank you for that. That was a lot and a lot to definitely digest and get through. So we're going to kind of turn it over to more of the international tax issues. And, it's kind of unique. One is when we see inbound companies come in and set up sort of a business entity, as Evonne has alluded to, or if you couldn't get from the context clues, it's usually in a C Corp structure. They're usually using that as a launching pad to North America in general. And I've seen this many times where it's like, hey, we've got a market in Canada. We have market in Mexico. We want to set up shop in the US though. obviously the attractiveness of the market and the security of our market is a big reason, but it does act as a launching pad. And where I see the international side comes in at is really from that perspective. But also for foreign parent and U.S. subsidiary cross-border transactions, what I'll briefly discuss, not do a deep dive, but discuss. The one other big point here is this is as things currently stand now. Okay, a lot of these will change or be tweaked because of this one big beautiful bill, or OB3, as part of the Trump administration's second round of tax reform. Okay, we will address that, I believe, in a future webcast. But for now, this is sort of as things change. And I will say, although some of them are changing, in fact, some of the names are changing, but really the point is the mechanics of it and the core of what they're doing are really just being fine-tuned. They are changing, but they're just being fine-tuned is sort of our viewpoint to it, from some of the lessons learned from the first round of tax reform, and some of the, I guess you should say, the vocalization of the public accounting community, and also the publicly traded company community and taxpayers in general. Okay, so the one thing the big three you'll hear about are and we'll stick with the acronyms: FDII, BEAT, and GILTI provisions, impact tax on foreign derived and international income streams. So FDII is an interesting one, and I see this a lot. Bring manufacturing component to the U.S. Here's where, like, hey, we've got this ability to do this manufacturing. It's going to be a launching pad again for North America. Now you're not only selling within the U.S., but maybe you're manufacturing or selling to clients or customers in Canada, Mexico, or even the rest, Latin America. We have this export. It's really an export incentive, is how I want to say, but it's also just for sales and really, sales, services, and licenses of property. But it allows Section 250 allows a deduction for this certain type of income. And again, you'll see there, I have it as an export incentive. And the one big thing is right now where the corporate tax rate is at 21%. Effectively, when you get this deduction, it really brings your rate on that to around 13%. Up to, I think it's 13.25. It does, again, things will change as January 1st, 2026 because of the OB3. But again, you're getting this income via this deduction mechanism at a substantially lower rate. So, again, when you're coming in the U.S., especially in manufacturing, providing a service and a service of your product, maybe to not just the U.S., but maybe some customers across, in Canada or Mexico or Latin America, it is something to keep in mind. And again, state conformity varies. As Evonne alluded to the previous slide, every state's sort of its own country. And so the same with GILTI, which we'll talk about, again, state conformity, whether or not they allow for this deduction or they want you to add it back to state taxable income, does vary. Now, for foreign parents of U.S. subsidiaries, this is probably the one that they tend to concern with the most, is BEAT. And this really imposes a minimum tax on large corporations. So there is a gross revenue or a gross income threshold that is significantly high. And this imposes a minimum tax on large companies that make deductible payments to foreign related parties. And really what this mechanism does is it sort of, on top of all the complexities of just a normal United States corporate tax return, it sort of sets up this parallel calculation to just normal taxable income to sort of beat modified taxable income, and applies a 10% rate to say, hey, if you were to follow this mechanism, and let's say we were to incorporate these sort of deductible payments to foreign related parties in sort of this parallel calculation, would it be more than just the normal U.S. Income tax rate? And oh, by the way, you're allowed certain credits to offset that. Okay, certain credits. Whereas the U.S., you sort of have you have a whole list of credits that you can usually use to offset tax due. Okay, so BEAT is the one, again, that foreign companies who expect to really have a lot of gross revenue and gross income in the U.S. that they're leery of. And also with those transactions comes additional compliance in the U.S. So that's really their arena where we see more of our focus on. GILTI, sort of in the same bucket with FDII here, is if you're going to be coming in the U.S. Maybe you would then set up a subsidiary, Canada, for example, or in Mexico. The U.S. has this sort of minimum tax on foreign profits that are subsidiaries under the U.S. The main one we see is GILTI and Subpart F income. Okay, and again, it's a minimum tax. If you're in a taxable income position, you're allowed another 250 deduction to effectively bring that. And I say minimum tax because it's not at 21%; it's at 10.5%. Again, will change as of 1/1/2026, and you're able to offset this in the U.S. with two things: either a GILTI high tax exception or foreign tax credits. The GILTI high tax exception is really if you're paying an effective tax rate really at 18.9% or more on that bucket of foreign profit. Okay, and that's something we help with every day. There's also a plethora of other international disclosures. In the essence of time, we won't dive into them, but the big ones you see there are 5471. That's the CFC reporting for, you open up a USC Corp and now you're invested in a foreign partnership with the USC Corp via the USC Corp. And then our big one probably is the foreign tax credit for companies is the 1118, and then the GILTI reporting on that minimum tax, if you will, the 8992 and the 8993, which is the Section 250 deduction form mechanism for both FDII and GILTI. The next slide.
Hey, Josh, you may want to expedite a little bit.
Yep.
Yeah, please. Thank you.
Yeah, I think this is Evonne.
Okay, yeah, let me quickly just cover a few of the points that I want to mention for indirect taxation and then we can sum it up for today's session. So on the indirect taxation side, the first one that you see up on the screen is sales and use tax, which is a quite complex but an important tax category in the U.S. 中文里面我们把它叫成是营业税和使用税。那在美国呢，在联邦政府的这个 level 是没有所谓的 sales tax 的 ，but under federal, the 50 states that we mentioned, each kind of decides their own rate for sales tax, and under the state, every counties can decide if they want to add their own rate or not. Under county, every state can also add their own rate if they want to. Some special districts under cities, sometimes they can even add more. So as you can see, it's a layer, add to layer, add to layer type of tax structure. And economic nexus 关联性 is a very, very hot topic, post Wayfair. And Wayfair is a Supreme Court cases that back in 2018, it's a South Dakota versus Wayfair. As a result of the court cases, basically now all the states can require companies to collect the sales tax, even if you don't have physical presence in the state. So just very high level. The general rules is if you have significant sales in a state, like more than $100,000 in sales or more than 200 transactions, then you're considered to have, economic nexus. Then you have to, register for sales permit, collect a tax, file tax return, all of that. For e-commerce company, there are different threshold. A lot of our Taiwanese clients that they are selling online, directly to U.S. customer from Taiwan. A lot of my clients actually, are in that e-commerce business. The company might end up registered in 20 to 30 states just because, all the sales to various states and customer. So this becomes very tricky and important. And with the sake of time, like I'm not going to dive into super details, but just keep that in mind. If there is sales tax issues and we are here around to help, we actually have a designated sales tax teams in the U.S. that specialize with a lot of our inbound client to kind of solve their specific needs in the sales tax compliance. I think on the other, payroll tax we already talked about. There are other, indirect tax like excise tax, depending on, the industry that you're in. There might be additional tax. For example, like tobacco and alcohol industry, there are very heavy federal and state taxes. There's also property tax to consider. If you're going to own property in the U.S., that you may need to pay this local tax, property tax to county and city at county and city level. So I think that's all that I have for indirect tax. And I know we are running up against the time. Maybe
Yep.
Josh, you want to wrap it up quickly?
Yeah, and if I need to, we can go into this in a little bit more in the next presentation. The other big tax considerations are really as a result of that inbound activity just in the U.S. and having a foreign parent, a foreign Taiwanese company on top of the U.S. company, for example. So the big one is fixed, determinal, annual, or periodical withholding tax. We refer to as FDAP, and this really goes back to the treaty discussion we had way at the beginning of this presentation that says, hey, the big three in my mind: interest, dividends, and royalties. As it stands right now, U.S. source income paid to a foreign persons, for example, a Taiwanese foreign or a parent C corp, you're going to hit it with 30% withholding tax. Okay, so again, you can time that generally, but just note that it will be there, and you will have to withhold on that. Generally, the U.S. C Corp will be withholding on that, and if they improperly withhold, the tax due is generally on the withholding agent, which would be the U.S. C Corp. The other one we get into is effectively connected income withholding tax, and this is really for all those other structures Evonne discussed, really the LLC, either as a single member or as a multiple member LLC. Depending on what you file, you're really going to have that foreign parent is going to have this effectively connected with a U.S. trade or business that isn't a C Corp blocker. And the rules with this is, you still kind of running through, you're going to get taxed based on what that foreign partner is. And if it's in a C Corp, it's going to be at 21%. And oh, by the way, they're going to have to file an 1120F and still be subject to branch profits. So in reality, you're not any different than you would be if you were just a US C Corp. If you're an individual, those rules can even be more harsh. So you can be essentially withheld on your effectively connected income at 37%, and then be subject to filing a 1040 non-resident return here in the U.S., which is we generally advise to do. The next tax here is the branch profits tax. I think we've talked about that enough. It's really just a tax fiction tax year to year that does a sort of beginning and ending of asset value. And says, hey, you really, in reality, you had this sort of appreciation, or if you had a declining asset value, it determines whether or not that branch profits. It's very mechanical, but it is something you cannot defer, turn on, or turn off. It's automatically calculated. Okay, and just again, careful planning and documentation are essential to comply with these taxes and benefits from a treaty provisions to avoid liabilities. And obviously here to help and guide you through that through each of one of these tax considerations. A lot of tax considerations, both direct and indirect tax, I think is the big takeaway. Next slide, please. All right, summary. So I'll wrap it up here. Really, I think the biggest takeaway here is the U.S. tax system remains fundamentally worldwide in scope. In fact, in reality, I don't think that's changed. If anything, it's gotten worse, in my opinion, with sort of a more frequent taxation under several regimes. Entity choice, registration, and compliance with both federal and state local rules are critical, as our international reporting and withholding obligations. A lot of our international tax reporting forms really apply to foreign inbounds, especially with cross-border with the foreign parent U.S. sub. Missing some of these forms comes with an automatic penalty. It is low-hanging fruit for the IRS. They will, if you miss these forms, doesn't matter if you're in a taxable income position, they can be $10,000. They can start at $10,000 penalties. They can start at $25,000 penalties. They are very draconian in nature. Businesses must be mindful of indirect tax and the complex interplay between U.S. and foreign tax systems. Again, especially when operating this cross-border. Okay, if you do have to pay withholding tax, please ensure it is a credible tax you can take in Taiwan. Okay, also understand the indirect tax impacts. Those, although a lot of times they don't come with much teeth, they have a lot of voluminous filing requirements and can be painful if not caught up front. Okay, proper record keeping, timely filings, and awareness of both direct and indirect tax are really, are the essential for compliance and risk mitigation. Risk mitigation is really the factor here, and the key, one of the key takeaways that we try to help clients with all the time. Al, thank you.
Oh,
thank you, everyone.
Okay.
Turn it over to Al.
Yeah, thank you very much. 谢谢大家哈，我有注意到，虽然我们有一些超时哈，那么大家参与的人数也都没有离开，可见这一个议题非常非常的重要。那么我们留一点时间，诸位如果愿意打字，或者是愿意举手发话，我们可以留一点点的时间给大家问问题。那么，如果大家比较喜欢写下问题来，那么不要紧，留下您的电邮，我们也会在会后哈快快的跟您做回复。那么我们稍微打开现场，那么 Valentine，can our audience speak or no?
So at the top of the screen, they have a Q&A section where they can write their questions,
Okay.
and I will publish them. And if they want to raise a hand, I can also open their microphone on demand.
OK，那么我们留一点点的时间给大家问问题。那么I go first. I have one question to Evonne or Josh. For the U.S.-Taiwan treaty part, I know it's ongoing. It's been there. I hate to say, although it's not forever, it's been there for a while. Now it becomes a domestic law. Is there anything, for example, there's certain Taiwanese company already established shops in the U.S. What can they do? They're already there. They're subject to this 30% dividend tax, which is not fully creditable in Taiwan. Can they, I hate to use the word lobby, can they write, or what can they do?
Yeah, sure. I'll take this one, Evonne, if you don't mind. Listen, U.S. subsidiaries, Taiwanese companies, really should, focus their lobbying efforts on direct congressional outreach. I'm even going to say coalition building, engagement with the Treasury and the AIT, really public advocacy and technical input on this legislation and regulation is where it comes in at. You can influence, to put it more broadly, you can influence, when we say congressional outreach, we mean your House of Representatives and your senators. Okay, letters to senators and representatives, especially those in the representing the states where your subsidiaries operate in the U.S. are an absolute key tool. But should be part of a broader, really coordinated strategy that levers, in my mind, both public and private sector channels. It's a group effort to advocate for treaty-like tax relief in the negotiations of a comprehensive tax agreement. I would, to further on that, I guess, to answer that question, Al, is really, given the recent legislation, the expedited as of 2024, I think this is, and the bipartisan support, it might just need this type of push. In past treaties, to get them enforced, it really took bipartisan effort, and both corporations of the U.S. who want to do business in Taiwan and corporations in Taiwan that want to do business in the U.S. to push it forward.
好的，那么刚刚好像有一位参加的朋友问了，因为刚才Evonne提到了不同的州。Evonne, there are certain companies have not gone to the U.S. If they try to pick and choose which state they want to do business, any suggestion so that they can pick and choose?
Yes. I would say there's no perfect state. So there is no one answer fits it all type of solutions. A lot of times what we do, I think Josh probably will echo to that, is we will sit down with our clients or prospects. We do an hour consulting sessions with them. We're trying to understand what is their business operational needs. Basically, essentially, we're trying to understand what is the business plan, what they want to do in the U.S. Are they planning to acquire assets? Are they planning to, rent an office space? What is the purpose of this U.S. subsidiary entity, so that we can better advise them, like which state might be the better, relatively better starting point. As I mentioned earlier in the slides or during the discussion before, a lot of times we do see company, if they don't know, they don't lot of, sometimes, they just want to set up the entity and kind of explore the market. They will start with Delaware, because Delaware is a very business friendly state without any, I would say, further presence that they are creating. Maybe they don't know if they want an office or not. They don't know if they're going to, buy a warehouse place or not. They don't know where their major customer is going to be located, but they want to kind of set up something and test it out. Delaware is the state that we often see a lot of Taiwanese clients, like it's a starting point. But as I mentioned, sometimes I see California a lot. Some of my tech clients from Taiwan, they, it's right in the Bay Area. They want to register and set everything up in California. We also see a lot in Texas, a lot in Nevada, depending on the, business industry and the operating natures.
好的，谢谢 Evonne.
There's a question came up in the Q&A section, if you guys can refer to it. Maybe I can read it. It's from Janet Penn.
Yeah, please.
She works at Taipei Fubon Bank. She has a question regarding EIN. She said they terminated their LA branch several years ago. If they plan to re-entry US market, can they use the original EIN or they have to apply for a new one?
You will have to submit a application or you have to reactivate your EIN. So depending on the length of when you file final return before and then how it was terminated with the IRS, sometimes you will be able to, restart it with the same EIN number. My recommendation is actually call the IRS using the original EIN that you have and see what's the next step to kind of, you kind of want to re-enter the market, like what do you need to do? So sometimes IRS will tell you need a new one because the old one is like gone. Sometimes they will tell you submit a form that you can reactivate it.
好的 Janet， 希望我们有回答了您的问题。那其他的如果还有其他的问题 ，feel free write us email 在这个 slides 的后面也有我们今天包括我的，包括我们另外2位美国的同事，2位讲者的 email。那么 feel free to send questions。好的，那么 it's getting late in Missouri. Sorry.
There's one more question that came up. If you want to take it, it's written in Chinese, so maybe Evonne. Can you see it in Q&A published?
I can't see it. Where? Q&A session. I didn't see it.
Give me a second.
Where do I see the? Sorry.
我看到聊天。
Hello. Oh. Can you hear me?
Yeah, go ahead.
有一
Yes,
个
go ahead.
陈怡如小姐问说，如果台湾公司销货出口给美国的某一州客人，这样就会establish
Nexus 吗
？Nexus with the state 或要缴 state tax， 请问这样也会有 federal tax 要缴吗？
如果讲的是销售税的话，那要看你的这个销售的额度。那很多的州它是有一个额度的标准的，有一些是10万美金以上，有些是说你可能没到10万美金，但是你已经有200单的这个销售了，那你就是相当于你就产生了这个关联性跟那个州，也就是所谓的 nexus。那这种情况下，你是需要注册你的 sales tax account， 并且根据你销售的这个内容去根据那个州的要求去 determine 它是不是需要缴纳什么 rate 的销售税，那然后进行申报。那一般像这种情况，我们会建议就是，我们也可以私下再聊，可以约一个时间，我可以，找我们销售税的同事跟你进行具体的咨询，因为根据你不同的销售的品种啊，以及你所说的这个州是哪一个州，它会有一个不同的答案，就是我没有办法很快的在线上给你一个非常完整的回答。对，
陈小姐，可能麻烦你把你们的销售的条件，是当地交货 title 什么地方 transfer，有一些这些相关的，对，还有 volume 相关的条件给我们。那么不需要名字，对不对？不需要 identity。那么我们这样子比较容易回答您的问题。好的，那么还是谢谢大家。那么Joshua, it's getting late there, so I'll let you go. Evonne 在加州可能还好，8点多。那么首先也谢谢二位讲者 ，Thank you two speakers from the States, and also thank you for all the audience to join us, and 我们稍微超时了一点点，但是呢，也谢谢大家的参与。那么我们期待在11月18号，同一个时间，然后我们还有另外其他更多的议题。那诸位如果在中间